All right, good morning. Welcome to the Sandy NFIP claim help before the April proof of loss deadline. That's a mouthful. Last chance webinar. And this webinar is being brought to you by United Policyholders and by the Hurricane Sandy New Jersey Relief Fund. Okay. The instructors today will be myself, Amy Bach. I'm an attorney and the co-founder of United Policyholders. We're a 501c3 with 25 years of experience advocating for insurance consumers and doing long-term disaster recovery work. And I was very proud to receive the Money Hero Award in 2012 from Money Magazine and to be with you today. I'm also proud to introduce my co-presenter, David Charles. David has spent his entire career in disaster relief, including 33 years handling insurance claims, representing both insurance companies and policyholders. So those of you who are on this call that are property owners with an NFIP policy, David spent many years being what's called an IA, an independent adjuster, and that is the type of adjuster that gets hired to adjust NFIP claims. So David was out in the field working flood claims for many moons. And welcome, David.
Thank you. It's a pleasure to be here, Amy.
We're going to get through our slides, and then we're going to you'll have the opportunity, all the attendees have the opportunity to type in questions. After we get through the slides, then we will answer as many questions as we can. And if you have typed a question in and we didn't get to it, we encourage you to email us or put your email address in your question, and we'll do our best to get to you after the conclusion of today's program. So the webinar is being offered through United Policyholders Roadmap to Recovery program. And we have been running this program since 1991, and the purpose is to help individuals and businesses solve insurance problems that can arise after disasters. We give people straight scoop guidance from expert staff and volunteers. We don't sell insurance or accept funding from insurance companies. We don't litigate. We don't represent people as lawyers. We don't give legal advice. We are a consumer group that gives guidance. We're funded by donations and grants, and this webinar, as I mentioned earlier, is supported by the Hurricane Sandy New Jersey Relief Fund with additional support from the Long Island Community Foundation. We do offer 24/7 help on the web through our website. And you can see in the picture there at the top right, Emily Cabral sitting at the table. That was at a workshop we did in Texas. And Emily will be reading the questions off when we get to that portion. She is our program coordinator. And both of us have spent quite a bit of time in New Jersey and in New York and other communities since Sandy. So some of you may have met Emily or me at one of our workshops. A few announcements. We want to remind you, those of you who've dialed in who are in New York, that the deadline for submitting an application to New York Rising is April 11th. So that is coming right up, and that is New York's equivalent of the RREM funding and the block grant funding that's been available for New Jersey residents. That deadline for New Jersey passed. So we're just mentioning the New York one because it's just coming up. And again, this is for alternative sources other than insurance of money to repair and rebuild. We also want to remind our attendees that the Toro Law Center is continuing to offer walk-in clinics for people who need help with their proofs of loss on Long Island, and that you can check the schedule. We've given you the link there. I don't know that they would turn away anybody from New Jersey, if you're willing to make that trip, but I think you need to check in with them first before coming down to one of those workshops. We don't know of a similar resource in New Jersey, but that is something that's being offered in New York, on Long Island, and I believe also in the city and maybe on Staten Island. David, is there anything you wanted to add to the announcements?
I think that Toro is a great resource, and they're doing wonderful work along with United policyholders in this regard. These deadlines are important. We don't want to miss a chance to get any kind of it that we can.
Okay, thanks. Sorry. Okay, so special NFIP rules. Any sandy damage you want the NFIP to pay for must be documented in properly prepared proof of loss forms and a claim package submitted by April 28th. And when we say submitted, the NFIP needs to receive it by that date, no exceptions. So we are recommending that people not wait until that date. You've got to make sure that whatever, if you use overnight mail or certified mail or FedEx, or you hand deliver, whatever way you're using to get the documents in, they need to be received by April 28th. No exceptions. And then the other point is that appeals, if you're appealing any claim decision, it has to be in writing and filed within 60 days of that denial or final claim decision by the NFIP. And these deadlines are strictly enforced. And that is particularly unfortunate for people who are not sure whether their claim has been denied. There's a little bit of haze around this for NFIP policyholders, whether in fact something that an adjuster has said orally or something that has been sent to them, whether that is in fact a denial. Some people don't. If you're not sure, you should seek clarification from the adjuster on your claim as to whether or not all or part of your claim has been denied, so that you don't miss a deadline. We've given you some references on this next slide to the key documents, and we'll be getting into more detail on each of these later. But you can go back to this slide if you need a reminder about these bulletin numbers. Okay, David, what is a claim package?
Well, a claims package is the industry way of talking about the detailed and comprehensive estimate of all your covered damages. You accompany that with a photo documentation of the loss. You've got to show the loss and what you're claiming. Sometimes you need expert reports to establish causation or to show a special condition. And you always need a signed and sworn proof of loss. The form that you talked about earlier, the proof of loss is often misunderstood. A lot of people just think that that means prove your loss. That's not it at all. It's a specific form that has to accompany your comprehensive estimate and your other documentation, or else it doesn't matter about all the rest of the things you send in. You won't get any more money without that proof of loss. So we're going to talk about the proof of loss in great detail as we go forward. And it's not just saying prove your loss. It's a form that goes along with that comprehensive estimate.
Very good. Okay. David, I know that there used to be a requirement that a flood claim proof of loss also be notarized, but they've done away with that requirement. Isn't that correct?
I think so, but you know, Amy, I still have them notarized. And just backtracking just a little bit, when you mentioned appeals that have to be turned in within 60 days, at this point, we're so close to the deadline that I wouldn't risk making an appeal unless I filled out the entire claim package also. You can appeal, certainly it's part of their policy with National Flood, but I would still make a demand with a proof of loss and a comprehensive claims package. They've got up to 60 days to rule on your appeal. If they ruled adversely and didn't accept your appeal, and you hadn't filed the new proof of loss with your comprehensive claims package, you've missed your deadline. So even if you appeal at this date, I would still fill out the comprehensive package that we're talking about. And to your earlier question, I do believe that in notarizing them, maybe it's overkill, but I do it on all of mine.
Okay, so it's not strictly required anymore, but it is another way to establish the sort of dot your I's and cross your T's. And I just want to emphasize, whether you're on this webinar as an individual who is dealing with your own flood claim, or whether you are a professional that is helping others deal with their claims, I think the point we are making that really can't be emphasized enough is the NFIP, as a, just seeing them as think of them as an insurance company, be very strict in enforcing their form rules. You know, typical other insurance companies can be a lot more creative, and some insurance companies will let you submit different kinds of proof as a proof of loss. Because the NFIP is governed by Congress and that's their boss, they don't have discretion to waive requirements. They have to make everybody stick to that form. So it's an unusually, I call it nitpicky, but that is the rule. You've got to get the forms in, their forms, the way they want them, the way they need them, no buts or ifs. Okay, so on your to-do list, we recommend getting a copy of the proof of loss that was already submitted for your claim. So a lot of people, when we go out and do workshops, and we just did a series in Colorado, and of course we did a number of them in sandy areas a while back, a lot of people, homeowners, don't know what a proof of loss is, and they may never have really even looked at a proof of loss that was prepared for them on their flood claim. So a lot of Sandy folks, Sandy survivors, victims, whatever label you feel comfortable with, had an IA, an independent adjuster, come out to the house early on, could have been in the month after the disaster, and fill out this proof of loss for them, say, here, just sign this and we'll get you your money. So a lot of folks may not even have a copy of their original proof of loss, so they don't even know what was presented to the flood program, so that it's hard to prepare a new one or a supplemental one. So if you don't have your original proof of loss, we highly recommend you get that as soon as possible. David, how can people get a copy of the proof of loss that was submitted on their behalf if they don't have it?
Well, hopefully they're still in contact or have access to the original adjuster who filled out their proof of loss and wrote their estimate. If that's not the case, you would want to go over that adjuster's head to the adjusting firm. Many times it's an independent adjusting company that handles those claims, and demand a copy of their file and the proof of loss and the estimate. It's absolutely essential that they have a copy of that proof of loss and the estimate that accompany the proof of loss, or they really won't know what they were paid for. And another point about this, Amy, that's very important, if that proof of loss is all that they've submitted and it represents the amount of money that they've already received, they've agreed in writing in a signed and sworn document that that's all that they're entitled to. That's why it's so important to file another proof of loss with another estimate that shows the additional money that they believe that they have coming to them. So they need that first one to see what they were paid on. If they don't already have it, they really need it.
Right, okay. So what else is on your to-do list if you feel that, A, you're not sure you've been paid everything that you were owed on your NFIP claim, and B, you want to, or you know you haven't been paid enough, and you want to make your case using all the information you're getting today on the webinar and whatever information you've gotten along the way. What's on your to-do list now to get more money?
Well, you need that claims on your slide that's showing right now, the collecting claims letters and documents and correspondence. That's very important. And keeping an eye on the timing of denials. It's often difficult to do because very often the denials are very innocuous. They're subtle. They don't say, I'm denying your claim because of this, this, and this, like they normally would on a homeowner's claim. Sometimes they'll say something just as vague as, you don't have contents coverage. That could be construed as a denial, and if so, it starts the clock ticking as to when your lawsuit can be filed. So it's not as cut and dried with the flood policy on what a denial is as it is in the homeowners policies. We really, when I counsel a client or I'm helping a firm that's helping flood victims, I always emphasize any letter, anything in writing, correspondence that came from the adjuster or the insurance company has to be reviewed very carefully to make sure that there's not a denial, the language that could be construed as a denial in there. And aside from that, any other documentation that they have that says anything at all about why they're paying something or not paying something is very important to know when you're preparing your supplemental. Because if they say they're not paying for something, they've given you a reason, hopefully, why they're not paying for it. So you have to rebut that reason. You have to come up with another reason, either an estimate or logic behind it, an expert report that shows why they should have paid it, or they're going to stand by their original reason. So you have to know why they didn't pay something, and you have to know what they did pay for to move forward.
Okay. So this phrase, a supplemental claim, I've noticed that you don't see it in a lot of, if you go to floodsmart.gov or you're not going to see that phrase called out, and you're not going to see a lot of guidance on this is how you present a supplemental claim. That's one of the reasons why we're doing this webinar. Is that, do you agree with that, David?
Absolutely, and people are just left out there not knowing what to do. And they hear the term proof of loss, and it is intuitive that you would say, okay, I just have to prove my loss. And it's intuitive that you would think, I'll just send this contractor's estimate. There are very specific requirements in the ways that they want to see things, the estimates and the documentation that you prepare. It has to be in their language. You have to do it the way that they want to see it, or they're just going to say, that's not good enough. And very often they'll just put you off and say, no, you have to have an estimate the way that we write them.
Okay. So a little later we'll get to the issue of how do you pay, where do you find the money to pay for the additional proof if you need to pay for it, meaning a report or that, which is a big challenge. I know a lot of the pro bono attorneys in New Jersey, the good folks at Volunteer Legal Services of New Jersey, have been struggling because, you know, a lot of the clients, folks that need help, they don't have the cash lying around to hire an engineer, you know, to present their proof. But that's a challenge, and we're going to talk a little bit more about that later. Okay, so David, our next slide refers to old school contractors' estimates. Tell me about this.
Well, old school, I'm old school. Most contractors, before unit cost estimating came along, would just write an estimate in a narrative form. They would say, I'll do all the sheetrock, all the trim, all the doors, if they even gave you that much detail, and then give you one bottom line at the end of the estimate. I'll do all this for $37,850. And they didn't really give you detail that showed how they were getting to their number. Those estimates will not work with National Flood, or for that matter, much of any different insurance companies, but especially with National Flood. They lumped their items together. They didn't separate rooms and areas. There was no material list. Labor was estimated by the crews, and there was no unit costing. The language of the insurance industry has changed. They force their own adjusters to do room-by-room measurements, a unit cost estimate, individual line items, and a full explanation of why they're doing things. Room-by-room measurements, if you've had a flood claim, you've already seen the room-by-room way that they break things out. And in that regard, the scope of loss has two parts. It has the action and the material or the object involved. And an example of that would be remove and replace carpet. The action is remove and replace. The material or object involved is the carpet. Detach and reset ceiling fan. The action is detach and reset. ceiling fan is the object involved. That's the basic nomenclature of a line-by-line estimate. We've got an example of what this looks like on our next slide. And you can see, and I'm sure that if you've got a flood claim, you've already seen reports like this. The printout on the left is a room-by-room unit cost estimate. As you can see, it starts out with the scope, seal and prime and paint the walls. Then it has a quantity, 392, and it has a unit of measure, which is the unit cost, the 392 square feet. And the unit cost is how much per square foot. Then they multiply the 392 times the 80 cents. That gives them the RCV column, which is the replacement cost value. The next two columns are depreciation and ACV. RCV less depreciation equals ACV. I know how complicated all that sounds, but every single line in the estimate follows that format. It has a description of the scope, the quantity and the unit of measure, the unit cost, and then that extends into the replacement cost less the depreciation, which equals the actual cash value. And most contractors would never, ever consider writing their estimates like this. It's just not something that they would do. So you need to find a specialist, either a public adjuster or a contractor who understands the language of the insurance industry and uses this kind of software to write your estimate, or National Flood simply won't consider it. And this has been one of the biggest points of frustration for most homeowners who are trying to prove their loss, is they can't find a contractor who will write the estimate in the way that the National Flood adjusters demand that they present it. And on the right, on this sample screen, you see a recap by category with depreciation. Now this is similar to the old school lump sum estimates, but it does at least break it down into categories of general demolition, doors, electrical. Those are the categories that you might be lucky enough to get an old school contractor to write it out this way, but this was actually generated from the estimate on the left. You get a number of different printouts when you use these types of software. The room by room on the left then will also generate the one that's on the right, and it'll show all the doors no matter where they came up. It'll show all the carpet no matter which room it was in. So these are the types of reports that we prepare when we're helping one of our clients, and they're the types of reports that the National Flood is going to insist on.
So are you saying that what we're looking at now, this sample scope, this would be, let's call it new school? This is the format that a homeowner's repair estimate needs to be in, repair or rebuilding. This is the format a homeowner's repair or rebuilding estimate needs to be in order for a National Flood Insurance Program adjuster to accept it. Is that correct?
That's exactly right. And I talk to people just every day who have
Yeah.
turned in valid contractors' estimates, and then they're refused. They say, nope, you've got to do it in Xactimate or SimSol, and it has to be done in this format that we're showing right now.
And obviously, this is not information that any homeowner is aware of when they buy a flood insurance policy, that they have to comply with this, and it may not even literally be a requirement in the law, but as far as practice, this is the reality. We're here to tell folks the reality is if you don't follow the rules, use the right forms, and have your loss documentation in the right format, you're going to lose. In other words, when I say lose, the flood program is not going to pay you what you feel you're entitled to because you just didn't follow their rules. Is that a fair summary of where we've gotten so far?
It's a very fair summary, and it's a shame, really, because it isn't written in any part of the flood policy that you have to present an estimate in this way. It's laziness, in my opinion, for the adjusters not to break down a contractor's estimate and try at least to understand it, because it puts an incredible burden on the homeowners. But regardless of whether it's good, bad, or indifferent, it is the pragmatic fact that you're going to have to do it this way, or they're not going to talk to you. They're not going to do it. They're not going to pay you any more unless you present it in this fashion.
All right, and so clearly it is, finding good help. I mean, finding a good contractor is hard any time of the year, but particularly after disasters, it's extremely hard. to connect with qualified, reputable construction professionals that are available. Of course, they're in high demand, and then it's even harder to find people who actually do enough insurance work to know how to speak the new school language. Is that a fair statement?
It's a very fair statement, and there's really another element of this that people are probably running into as they try to talk a contractor into doing it this way. Most of the contractors don't want to, because they think unless they know that they're going to get the job, why would they spend the hour after hour that it takes to produce an estimate like this just to help someone that they'll never make a penny on it? So
Right.
it's a terrible disincentive to the contractors to do this. They don't want to fool with this kind of claim, this kind of estimate.
Okay. But I mean, the good news is it can be done, correct? I mean, it's not rocket science to translate an old school contractor's estimate into the new school language, is it? I mean, maybe rocket science is not the fair analogy, but it can be done, correct?
It can
If
be
somebody
done.
knows how to do it.
Yeah, we do it all day, every day. We take contractors' estimates from contractors who are really good people and solid contractors, but they just don't have the ability or the software or really the will to spend the time that it takes to do this. So very often a homeowner will have a contractor that they really want to use, but he won't be able to produce this kind of estimate. So that's one of the things that we do a lot of, is we translate those old school estimates into this language that the National Flood Program demands.
Okay. All right. So let's talk a little bit about depreciation, because I know that for some folks who are looking to get or need a higher payout on their flood claim, and are entitled to it, but didn't get their loss estimates weren't presented thoroughly or accurately the first time around. Now they're going to take a second crack with the supplemental. One of the main areas where people found that they didn't get paid what they should have gotten paid is on depreciation, where the adjuster applied depreciation incorrectly to their original proof on the original proof of loss. Can you talk a little bit more about that phenomenon?
Yes, you're exactly right. Depreciation is not written in stone. There's no guideline in the flood policy that says you will depreciate in one manner or another. It's very subjective. Depreciation is based on the estimated useful life of an object or of a building material, and it's calculated as a percentage of the replacement cost of the item. And also, repairs are not subject to depreciation. If you just fix something without replacing materials, it should not be depreciated. A repair, also, like if you detach and reset something, and just so that you can fix a wall, you might take a wall hanging down or a window treatment down, that should not be depreciated. That's strictly a labor item. And depreciation is completely subjective, and it varies widely in how it should be applied. All things do not depreciate at the same rate. I think your next slide
Can
will
you
need
give an
to,
example?
yeah. Uh, well, an example that I use all the time is, and we'll talk about a contents item here that's easy to relate to. If you can hop to the next slide, Amy. A couch, say $1,000 couch, just for a nice even number we can talk about. If an elderly couple buys that couch, they're not going to be very hard on it. It might last 10 years easily. If a young couple with 5 kids buys that same $1,000 couch and the kids are jumping up and down on it every day, that couch may not last 5 years. It's the same couch. It was the same amount was paid for it, but it depreciates at a different rate because of the way that it's used. And the same thing is true for the components of the building. Everything on that estimate that's being replaced will have to show some kind of depreciation. But obviously, your studs and your sheetrock depreciate at a very, very slow rate. Actually, the National Flood Program is the only insurance program I know that makes you depreciate studs and sheetrock. Those things are considered to be there for the life of the house. Now, people paint every few years. They replace their carpets. They replace their shingles. That's the kind of things that you normally see depreciated on a homeowner's policy. But with National Flood, they depreciate every single thing. So a shingle might depreciate. If you have a 20-year shingle, then you figure that it's going to live for 20 years. it's 10 years old, that might be up to 50% depreciation. But the studs are going to be there until you tear the house down. So I would depreciate studs at a 0.5% a year at most, just to show some token of depreciation. And these are the kind of, also I might add, those aren't calls that a contractor can make. That's getting into the area of public adjusting, and actually attorneys and public adjusters are the only licensed professionals who can talk about those types of things. So it makes it that much more difficult.
I'm sorry to interrupt. So in other words, let's say, again, I'm a homeowner, I've signed on to this webinar, I'm trying to make sense of all this unfamiliar language, and I'm already, been slogging through 1,000 forms I've had to fill out, paperwork, schlepping around, and I just have this instinct that that there's more money on the table for me that I'm entitled to on my flood claim, and I'm trying to make sense of all this. Can I, now I understand that an adjuster could overly depreciate. They're hurrying along and they're just going to depreciate across the board by a certain amount without actually looking at the condition of the item because they're in a hurry and they want to move on. I understand adjusters, they're paid by a commission on each of the losses, so of course they're going to want to move on. They have pressure to close files. But here I am, the homeowner, right? And I'm trying to figure out, is there more money on the table for me? Was my flood claim overly depreciated by the adjuster? Can I even figure that out on my own?
You can. It's not that
by
easy.
Looking at documents? How do I know?
Well, when you look at their estimate, every line on their estimate is going to show the depreciation. It's going to show the replacement cost value. If you recall the slide a few slides earlier that showed an estimate.
Go back to that.
Yeah, let's look at that top line. The top line, seal, prime, and paint the walls. The replacement cost, what they say that a contractor would charge to do that in that room, is $313.66. The depreciation is $22.54. That $22.54 is deducted from the RCV, the $313, and that gives you an ACV, actual cash value, of $291. So that's the basic formula of calculating insurance.
Okay.
RCV minus depreciation gives you ACV. Now, in that case, the depreciation was less than 10%. 10% of that 313 would have been 30 instead of 22. So that was probably around 8% depreciation. That's the only way you would know, is to look at that ratio and do the math in your head or on a calculator. But if you say, for instance, if you had seen that they had depreciated at $150, say 313 less 150, that would be extreme depreciation. That would be almost 50%. So that's how you know how strict or not strict they were on depreciation. And another aspect of that,
looking at this sample, let's say where it says remove carpet and it says depreciation 0, does that mean that there was no depreciation applied?
That's right, because that's an action.
Okay.
That had nothing to do, and that's a good example there, Amy. Under the first one, remove and replace carpet pad, there is depreciation applied to that because there's carpet pad being replaced. It's the replaced part of the scope that brought in the depreciation. But when you just remove something, say if you take something down or tear it out and throw it away, there's no depreciation. That's a labor-only item. And also an interesting nuance of that, they removed and replaced the carpet pad, but they removed the carpet and replaced the carpet in 2 steps. The reason for that, you'll see under remove carpet, it has 89 square feet, but replace carpet, it has 102 square feet. There's no waste on taking something out, but there is waste when you put it back in. So the carpet has a higher quantity because 15% waste was added to it. And you waste some carpet when you do it. That's why those numbers came out that way.
Okay. So a lay person could actually look at this column, and we're going to assume that most people who had a flood claim that got paid got some kind of an estimate that looks a little bit like this. You can look at that column and get a sense of how much depreciation was applied if you were going to try to do this on your own, which is very challenging. but better to try. If you can't get the help, we're going to go through sources of help later on. If you've got to try to do it on your own, the very least you can do is make the argument that things were overly depreciated, and then take it up later. But at least that is a very common area where people get shortchanged on their floodplain payments. Okay.
Absolutely right.
Okay, so NFIP. Sorry. By the way, audience, I'm in San Francisco and David is in New York, or New Jersey rather. Sorry. So just so you all know, NFIP nuances. The easiest way to describe what is covered for replacement costs on a building under a flood policy would be to show you here what is not covered. David, what are the things that an NFIP policy does not only pays actual cash value for, not replacement?
Well, it's the items on this list, but a preface to that is the only type of national flood claim that you get any of your depreciation back on has to have several certain requirements. It has to be a single-family dwelling. It can't be a multifamily. It has to be your primary residence. It can't be a vacation home or a rental. You have to live in it 80% of the time of the year, just in front of the time that you were flooded, and you have to have it insured to 80% of its value. Now, if you meet all four of those conditions, you can get the depreciation that we just showed you returned once you do the work, except on these items: appliances, carpets and pads, outdoor awnings, antennas or aerials, detached garages, and covered property which is abandoned. Those are the things that you'll never get your depreciation back on, even when you do meet the four criteria that I outlined earlier, which is mainly it's a single-family dwelling, your main home that you live in 80% of the time. To get these things back, you're also going to have to fill out a proof of loss that it's a replacement cost proof. I'm sorry, Amy, go ahead.
Okay, all right. No, that's fine. So, and there are 3 forms that people need to make sure they complete. Is that correct?
That is correct. There are 3 different versions of the proof of loss. There is the basic proof of loss, which they probably already saw when they got paid, the one that the adjuster filled out for them, and that's the one that you're looking at right now. That's the legendary proof of loss form. It's not filled out in this version, but we're going to show you how it does fill out. There's also...
Which you want me to say on the blank or the filled out?
Let's look at the filled out one. And that filled out proof of loss, it has 3 basic sections. The top third of that form is talking about how much coverage you've got, when it went into effect, what your address is, what was the date that the storm hit, what kind of house it is. Then you get down to the numbers, and the first 4 lines there are very confusing to people. The full amount of insurance is easy, but then line 2 says the actual cash value of the building structure. That has nothing at all to do with the amount of damage incurred. People always seem to think that they're being asked to fill out there how much damage they had. That's not what that means. The first 4 lines are talking about the value of your property before damage occurred. The bottom 5 lines are talking about the damage. So line number 2, actual cash value of the building structure, that's talking about the depreciated value of your house before any damage occurred. Where the damage calculation starts to show up is line 5, the full cost of repair or replacement. That's the number that a contractor would charge to build your house back. And you can, many proofs of loss, they'll have the building and the contents together. Personally, I don't like to do that because I think it's confusing to people. I fill out a proof of loss for building, and I fill out a proof of loss for contents. They are separate policies, by the way. You don't have to have both. So I try to separate them to avoid any confusion. And in this instance, we did that. There's no contents on this example. So line 5 is the $195,707. That's what we are saying that a contractor would charge to put your house back the way that it was. Line 6, less applicable depreciation, that's the depreciation that we believe, that we calculated, and that we believe is fair to deduct from that. So line 5 less line 6 gives you line 7, actual cash value loss. Remember, the basic formula is replacement cost value, or RCV, less depreciation equals actual cash value, or ACV. And that's line 5 minus line 6 gives you line 7. And after you've got line 7, you take the deductible. So line 7 minus line 8, the $1,000 deductible, gives you line 9, the net amount claimed. Only the bottom 5 lines of this form have to do with the amount of damage. The top numbers have to do with what the house looked like before the damage occurred and how much insurance you had.
Okay. What is this next form?
The next form is the form that you have to fill out to get your depreciation back. It's also a proof of loss,
Okay.
but it's a replacement cost proof of loss. It has many of the same numbers that we used on the first one that we just went over, but the main difference is the bottom line there, supplemental claim, and that's the amount of recoverable depreciation that you can get back when you turn in this form and show them that you did the work. And that speaks back to our earlier discussion about what's recoverable and what isn't.
Okay. What if I live in a single home? It was my residence. It was a single family dwelling. I qualify for replacement coverage, so I can get back depreciation that was withheld. But what if I don't have the money to make the repairs before the April 28th deadline? So I can't prove that I did the work. Am I out of luck on recovering that value from my policy?
You shouldn't be. In fact, I think that on Sandy, they waived the requirement for withholding all of this, but I've seen some of the companies hold it back and some of them just go ahead and pay it. You still need to file this form to protect yourself and to claim that money. And honestly, I can't predict whether they're going to pay you or not in that regard. It seems very unfair to me if you're being punished like that.
Sorry.
No, that's all I was going to say. It just seems very unfair that they would hold that back when many people didn't get enough money to do a fraction of the work. I imagine that many of our listeners today believe that they have a lot more money coming to them. So it would be doubly hard to prove that you'd spent money that you don't have to spend.
Right. So if you can get this form completed and filed again with the NFIP by the April 28th deadline, then that's the safest course of action. All right. And then we hear a lot of talk about building code upgrades, of course, on the Jersey Shore. A lot of people are struggling with elevation requirements and compliance with local building codes. Talk to me about this form.
Well, this is the increased cost of compliance proof of loss. It's the third of the 3 proofs of loss. Increased cost of compliance is a program which does several things. It will give you up to an additional $30,000 to raise your house. Those of our listeners out there who have been declared to have substantial damage by their local municipalities, now they know they have to raise their house to the base flood elevation of the new flood maps in order to rebuild. So this helps them do that. But also, it has 2 other ways that you could use this $30,000. It can be used to raise your house. It can be used to move your house. Some people literally move their homes. Or it can be used to tear the house down. And it's not an additional amount. Say the most you can ever collect under the National Flood Program on a building is $250,000. If you've already collected, say, $230,000, the $30,000 for ICC is not available to you. You could get another 20. You can never go over 250 in a combination of your building claim plus the ICC claim. If you've only collected $100,000, as an example, you could collect the full $30,000 on this.
Okay. So why are these forms so important? Because unless you file them and correctly before the deadline at the end of April, you will not receive any more money, no matter how much the NFIP still owes you in legitimate damages. And if you try and recover through a lawsuit, your case is likely to be thrown out on a technicality if you have not complied with these basic filing requirements. And that is the reason why we are doing this webinar, because we know people need every available dollar to repair and rebuild and recover, and we want to make sure that if there is additional money owed on a national flood insurance program issued policy, whether it's a NFIP direct or one issued through a WIO, write your own insurer, doesn't matter how the policy came to you, if there's more money owed to you, our objective is to give you some guidance and information so that you can collect that money. And this may still be, you may still have work ahead of you to either through an appeal or through a lawsuit. But if you haven't gotten the proofs in by the end of April, you're out of luck. So that's just the reality, and that's why we scheduled this webinar. Okay, a few little points of guidance that I want to make sure we get through and give some chance for questions. Here is some guidance from a bulletin that the NFIP itself put out, recognizing that there are factors unique to a building or the local community that may inflate the cost of data you got from your independent adjusters were generated through computer programs that tallied up the costs of your repairs, and those programs may not have taken into account these unique local factors. You know, we know a lot of costs went up after Sandy. There was shortage of material and labor, and those factors have to be considered in terms of what you are owed. So, so that this is some guidance that may help you. An estimate should detail the full scope of repairs, count other required labor and material components. And this is from the NFIP's own bulletins. Remove and replace a countertop even though it was untouched by when the base cabinet is ruined, requiring its removal and replacement. The reason we're putting these slides up here for you is this is some of the weeds that you have to get into when you come back with a supplemental claim and say, I'm entitled to more money, and this is why. David, any comment on this point?
Yeah, it's a good point. And if you don't explain why, if all you say is I want more money, you're not going to get it. You have to document it, and you have to prove it, and you have to do it in their language. And your example is a good one. The countertop may not have been damaged in your example, but they still had to detach it, and it might break apart when they do detach it. So even though it wasn't touched by the flood water, it's part of the repair that's owed to you.
Okay. And again, you know, explaining the need for better craftsmanship or material quality, have to get into when you are seeking a supplemental payment. All right. A lot. Look, we are, you know, at United Policyholders, we spend a lot of time with disaster survivors. So we know that it's easy for us to give guidance and say, do that. And a lot of the guidance is hard for people to follow because, you know, a lot of folks out there, you know, no experience in construction, no experience in insurance, dealing with 1,000 things in their lives and saying, look, I just can't do this on my own. I've tried. I just can't do this. Where can I get help? And I know a lot of folks have gone to lawyers, a lot of folks have gone to public adjusters, a lot of folks have gone to pro bono lawyers and clinics. If you are at a stage now where you just haven't been able to get help, but you know you need it, you can't do this on your own, what are some of the places that you can go at this stage? And we are very aware that, you know, people have hired lawyers that made promises that they couldn't deliver on. People have hired public adjusters that made promises that they couldn't deliver on. We know there's a world of situations out there, but there's also hopefully many people who have gotten good help and are on track and hopefully are sitting through this webinar saying, check, did this, check, did that. But if you are in a situation where you are still looking for help, here are some options. Master Claim Consultants is David's company. They're the only entity that we know of that is still available for people in New Jersey and New York to get on a flat fee, not a percentage, but a flat fee to get your paperwork together for you in the best shape for submitting a supplemental claim. And I'm not, we're nonprofit, we're not referring, we're endorsing, warranting. We are identifying a resource that we think is valuable. And David's information for the service, very unique service. As I said, I don't know anybody else doing this on a flat fee. You can go to that link on our site. You can read about the services he's providing and the pricing, and you can absolutely follow up with him on your own if you'd like. There are, he's got a team that he has trained, and this is what they are doing, is translating old school into new school at a very reasonable fee. So, and he is not going to, if he doesn't think there's any more money owing on your claim, he's not going to take you as a client. Then any of the following, provided that they are reputable and have experience with flood claims, NFIP claims, and an attorney, but of course they work either hourly or on contingency fee, a public adjuster, they only work on contingency fee, or pro bono attorney. And I put there expert expense ? Because the challenge for pro bono paperwork together, at least in terms of filling out the forms the right way, but when it comes to helping you get your expert reports or your scope of loss in the right format that we talked about earlier with the depreciation, ACV, our replacement cost figures broken out with unit costs and room by room and all that, they're going to need somebody generally needs to pay for that, and a lot of the pro bono resources don't have the funding to help you pay for those expenses. So you as a homeowner may need to pay those expenses yourself. That's just the reality. And I think at this stage, for this, what we're talking about here, hiring somebody on contingency really is not practical at this stage for most people. Where to send your proof of loss? If your flood policy was sold through an NFIP direct company, we've given you the addresses here, and you'll be able to access this slide later. But then here is a slide that shows you how do you tell whether your flood policy was issued. There are two kinds. They're either issued by NFIP direct, that would be the one on the right, and the one on the left, Fidelity, that is a flood policy that was sold through a WYO, write your own. Why does this matter? Because your supplemental claim should be submitted to the address at the top of your policy. We've highlighted it on the right, circled it on the left. That's where you need to get your stuff in before the 28th, all right? So whether you have an NFIP direct, you send it to the address on the right. If you have a WIO, you send it not to the address on the left if you don't have a Fidelity policy, but whatever WIO, whatever write your own company issued your flood policy, that's where you send your supplemental claim, and that's where you find it on your declarations page, all right? David, what are the most common problems with flood claims, real quick, so we have a few minutes for questions?
Well, I think the most common problem is the estimates are just wrong. They're low, they're improperly figured, the adjusters are in a hurry, things are difficult at first, and they just miss things. They got the low-hanging fruit, but they didn't spend enough time looking hard at the kind of damages that become apparent as you go on. And the homeowners are just overwhelmed by the whole thing, and generally they're not construction experts, so they don't really know. And oftentimes the allegations of pre-existing damage, that's a terrible fight to have to fight. Earth movement exclusion, a lot of different things come up as ways to deny claims that you're going to need some kind of an expert opinion on in order to beat their denial. And that's a real problem at this late date, especially rebutting a denial. And the right kind of experts, that's the most important thing. To get an expert that can address the reason that they say that you're not owed anything else. It's very difficult to do, and we don't have much time left. So hopefully, if you have been denied for one reason or another, you've already got an engineer or an expert moving towards rebutting their denial. It's still possible, but you don't have much time left on these things. You've got to prove your case if they decide not to pay you something. That's the slide that I was probably just addressing, Amy. Proving the value of the damage.
Provide more and better documentation. With an appeal, we at United Policyholders have filed a Freedom of Information Act request with the flood program to find out some of their statistics on appeals. We have gotten a lot of reports from people that have said it really wasn't worth it. You know, the flood program is not going to reverse their own decision. So I think a lot of folks, including David, don't recommend putting too much hope to an appeal. And then, of course, there are a lot of lawsuits that have already been filed. But again, unless you have you've gotten your proof in, there's no point in going forward with a lawsuit because you're going to get bounced. At our website, you'll find lots more information on dispute resolution. Here is the address for your appeals. You can get that. Again, this program is being recorded. You'll be able to access this information after we're done. Here are some sources of financial help beyond insurance. The block grants that are available in Jersey. There's the SBA and FEMA grants, charitable aid, your ability to take a loss on your taxes. Here are the New Jersey pro bono legal help resources, legal services in New Jersey, volunteer lawyers for justice. Hopefully all of y'all in New Jersey have already been tapping into their resources. In New York, the Truro Law Center, their wonderful clinic, their wonderful blog, Professor Ben Rajat doing just an outstanding job down there on Long Island helping flood survivors. Here's our Ask an Expert forum link. You are more than welcome to use that anytime, 24/7. You post an answer, and you can also look at previous answers to see if somebody has asked your same question. Again, here's some links that we'll be keeping up for you that you can use if you need them to all kinds of information related to the flood program. Link to our claim help library. We're going to open up. We just have a couple minutes for questions. David, thank you so much. Emily Cabral, thank you so much. Our staff attorney, Dan Wade, thank you. Everybody who's tuned in, we are so proud to be able to offer you this very unique, valuable information. We hope it's helpful. Don't forget to, if you did type in a question, we don't get to it, give us your email address so we can answer it. Emily, any questions before we close?
Yeah, we've received a couple questions, and anyone who submitted a question through GoToWebinar, we have them all here, so we'll be able to, if we don't get to your question right now, we will be able to email you an answer. So the first question we have is, what is the last day I can submit my contents inventory to the flood insurance company?
Well, that would be the same thing. You're going to have to submit it with a proof of loss before the April deadline. Contents is a policy just like building. They're separate policies. I would file a proof of loss with my contents inventory. I wouldn't just send in a list and trust them to process it. You have to send in a demand, and that's what your proof of loss is.
Great. Okay, the next question we have is, what items can you not recover depreciation on with your NFIP claim?
If you are in a building that you live in 80% of the time, the things that we talked about earlier, the things that most people will run up against are carpets and pads, appliances, and that's pretty much the main two: appliances, carpets, and pads. Awnings and antennas are also, but very rarely do they come into play. The biggest thing: appliances, carpets, and pads.
Okay, the next question is, I have hundreds of photos of my damage. If I print them out, can I claim that cost in my claim?
I don't think so, and I wouldn't print them all out. I would do representative samples. Just show that you had an overview of each room, and then if you've got expensive contents items, those. but a lot of people send in way more photos than they really need to. They have to be good photos. That's the main thing. One overview of the room to show how much damage you had, and then pictures that clearly identify the items that you're listing.
Okay. Have you heard of any success in giving your contractor a copy of the adjuster's report and letting them fill in the numbers they think is correct?
Well, that would be a common sense way of doing it. It's still going to have to be in that proper format. One of the things that we see when we help people with their estimates is the contractors don't know that format. They'll know what it takes to build the house back. So we work with the contractors to put it in that format and to help them. Contractors are just overwhelmed by the complexity of this type of estimating. Unless they do it on a daily basis, they're going to miss things. They're going to miss things that they know, in their way of speaking, would be there, but they're going to miss them because they don't know how the National Flood Program estimating has to show it. I know that sounds vague, but it's very true. They might say, replace this wall. The National Flood estimate way of estimating that may have 5 or 10 different items that they wouldn't know because there's 30,000 items in those databases.
Okay. So the next question is, I have a proof of loss and we disagree with a small portion of the cost to repair. Does the entire estimate need to be redone, or can the contractor limit the estimate of our supplemental claim to only the areas we disagree about?
I think you could limit it to that, but I don't. I generally do the entire estimate. I want one document to be a demand for what I expect to be paid. But I do see some adjusters that write those up and call it just a supplement. I've rarely seen an estimate that I could completely agree with anyway from the first part. So I generally fix what I consider are the errors on the first part, and then I add what I think they missed to that. I'm not going to say that it can't be done that way. It's not the way I would do it, but it's better than not doing it at all.
Okay, we'll try and get a couple more questions in here because we received a lot of them at question time. So where can I get a copy of my proof of loss and estimate, which was prepared by the insurance adjuster right after the storm?
Hopefully you still got the information of that insurance adjuster's contact information and the company that he worked for. You should try that, and you should also look at one of the last slides we showed was the declarations sheet that showed where you have to send your paperwork into now. I would write both. I would put in writing a demand for a copy of all my paperwork to both of those sources. There, we've gone back to that slide. The address at the top of that slide is your declarations sheet that says how much coverage you've got. You should have gotten that when you bought your policy. And I would write to them, and I would go for the adjuster who did it. He would have a copy of all these things. He's probably gone back to wherever he lives now. I'm quite sure he has. But demand a copy of your proof of loss and your estimate from them as well. But don't just leave it to the adjuster. Demand it from the company also.
Okay, I am told that the ICC proof can be filed up to 4 years after the date of the loss. Is that true?
I'm not sure if it's up to 4 years. You're going to have your substantial damage declaration by now. I don't know anybody that hasn't that expects to get one. I would get it started immediately. You have a few years to go ahead and complete it, but I think you should go ahead and file the proof. But honestly, I can't say with a definite answer that 4 years is acceptable. I know that I've heard people up to 2 years, but I don't think 4.
Okay, good. Well, for the sake of time, I'd like to end it right there. All of the materials and the links in the PowerPoint, as well as we're recording the webinar, so hopefully we'll be able to upload it as well, are available on our website at www.uphelp.org/webinar/032614. And I'm messaging this out to the entire list of attendees right now so that you'll have it on your computer.
All right. Well, again, it's been a pleasure to present today. We're very grateful to the New Jersey Sandy Relief Fund for the financial support to make our work possible, and to David Charles for sharing his very unique expertise to benefit the homeowners in New Jersey and in New York who have been working so hard to muddle through all the daunting details of recovery, in particular hoping flood claims. So thank you, David, so much. And we're going to sign off now. And Godspeed. We're rooting for all of you.
Thank you, Amy.